Is we're on. All right. So, good afternoon, good evening, good morning, wherever you are. Right, I hope you have a fabulous weekend. Right, my name is Suansu Angels, and we're about to begin the class on distribution, accumulation, and basic stock fundamentals. So, any questions, comments before we start? And I believe you all have access to the worksheet. All right, I believe y'all do. So let's get started. All right, let's get started. So, is anyone familiar with distribution? Anyone? Well, y'all must have heard the term, right? Distribution anywhere. Right. So, in market terms, right? In market terms, right? Distribution is, securities, stocks that have been carefully selling into the market, right? So that it does not affect, the gradual movement, and therefore the stock itself, right, will be driven down. But in that process, right, um, you have to attract enough buyers so that it would seem to them that it is bullish, and therefore they can distribute the shares, right? But that may be a little bit too confusing. So now, my definition of distribution is really simple, right? Bears sizing in a short position or a sell position, upon which they distribute the shares on a bullish support, right? If they can find one. So let's see, right? And basically, right? How do we identify a possible distribution? Right? What begins with the distribution? Like I said, making even selling inventory. That's right. Low volume, moving to the downside. Okay, so EMA said uh, it is possible that the shorts are sizing into a position when there's a low volume moving to the downside. Well, since we have low volume moving to the downside, what could that possibly mean? Right? Let's give a couple possible scenarios. Right? So, say if the market is moving down with low volume, what does that mean? Right? First of all, we know that okay, there isn't enough interest during the move down. Right? So there's not enough. So if we say that a low volume moving to the downside is a sign of distribution, that would have meant that there is low bearish interest, right? And also low volume moving to the downside would have meant that there's barely support on the bottom. Or say in the second scenario would mean that there is a lot of support on the bottom, and the bears are already in and trying to test, what's underneath, right? In both scenarios, it would not be an optimal entry for a distribution. Why? Because one, if you have low bearish interest, what does that mean? The bears are not even in yet. They're trying to find, an optimal short entry, usually at the top, right? And on the second scenario, right, if there's a lot of support or there's no support, then it would make no sense, for the bears to initiate. Why? Because to distribute shares, they need bullish support. You need an oppositing order to fulfill your orders, right? When you sell at market price, someone on the market is buying your shares. Similar with options. Someone has to have it, right? That's why you see when you have, for example, your 0-day expiry, right? A lot of them have 0 on the bid and 1 cent on the ask. Well, nobody wants them. So, and people only want them if the sentiment is good enough, right? Options the representation of the market sentiment. Therefore, in the second scenario where there is no support or where there is plenty of support, it does not make sense for the bears to enter, because anything that they do would have meant, would have either create a huge market downturn, right? A huge market downturn, and that would have been what, a short, right? But if not, if they do, and it's in the ladder, on the ladder, if we have, a lot of support, then you would have triggered a demand zone. And what's in the demand zone? Anyone know? Buyers, right? Simple. We'll get into what made up a demand later, but if you trigger a demand, there'll be a lot of buyers, and what you don't want is a strong demand zone where a possibility of a cover and a short squeeze may occur, because if they're right at the demand zone, the only thing they can hope for is to break that demand zone and cause the bulls to exit, right? But we're talking about a strong demand zone. Therefore, if they cannot get what they want, the bears have little to gain. And our goal for all traders' goal are to maximize profit, and therefore they would not short right on a strong demand. They have to worry it out first. So low volume moving to the downside is not the way to initiate, a new distribution. Any questions? Right now, okay. So what are the other signs that you guys think that may be, that possible distribution? What are the signs? What are the patterns? Let's say upside to supply. Okay, for example, we have a supply here, a rejection of pre-market high. Okay, so we can establish a supply here, a red zone, right? This is the end of it, right? A rejection of supply. So here, let me explain what does the supply consist of, right? Supply consists of what? The sellers, right? The sellers that are bulls. Okay, so the bulls think that um they think that at spot, for example, SPY at 390 is, you know, a uh in the intrinsic fair value of SPY. Okay, so they would think that once SPY hits 390, for example, um, any upside would have meant that SPY is overvalued, and therefore they would sell it there. The first constituent. And second, the bears, who knows the bulls are selling at that range, and they have orders ready, right? So therefore, the bears there would think, if we have so many sellers here, so every time if we ever pushed to this level, how about let's short it? Because if all the bulls are selling it here, right, and if we ever get back to it, it would have meant they short the top, um, perfect short, right? And then you have what? What do we have other than the bulls that we're selling here and the bears were shorting, right? Because they know that the bulls are selling. What else do you have, right? This is the two basic sides, right? Oppositing orders, right? Bulls and then the bears. But there's more. Can anyone guess? I can type it up. Let's see it. There are no wrong answers here, right? There's just different scenarios which give different type of, possible outcomes. So, any ideas? Or you can look at the worksheet. The question is, what other than the bulls and the bears? The bulls were selling, right? Because they think it's not worth it anymore. They take profit. And second, the bears who were waiting for the bulls to take profit so they can write the strength down. So what are the other ones? What are the other possible entries here? Right? Because it's not just those two. There has to be more that can be made up from the demand, from the supply zone. So looking at here, right? How do we reject? What are the ways that could reject this supply, and what are the possible reactions that could come with it? Image is getting blurry on and off. Okay. I'm assuming that's an internet issue. Though no one has an answer. Right. Not sure. Okay. So think of it like this, right? If you are a bull, like a perma bull, and you think SPY is a stable investment, or Apple, anything, right? So you would buy it at a low, if that the low that you think, right, which is at your demand zone, and you would accumulate more and more on the next demand zone, or every time that it reaches your demand zone. And now, if you're now go the opposite way. If you're a perma bear, you have what? You have a short position on SPY, and therefore you will short every time we get to the supply zone, add on to your position, right, at a lower cost. Because you need what do you need? What do we need? Because you always want to buy lower and sell high, right? And similar with the sellers, they want to sell high and buy back low. So if if they want to lower the cost basis, they have to keep on adding the higher as they can. So you have an extra bears. So the bears who are already in the position, right? The bears who are already in the position on the supply zone. That's why we rejected off it, right? Why did we reject off a certain level, right? Because there's shorts and there's sellers. So there's shorts who have already entered on pre-market, just add it here. Reshort the supply zone. And therefore, we can, if the bull sees that it's a strong supply zone, they would think, oh, maybe we can't push it. Let's sell, right? That gives you momentum, right? Now, there's one more, okay? And if there are enough bulls to challenge that of the supply, and they wish to also stop out the bears, what do? They try to buy up all the shorts and all the sellers in the supply zone, right? Which push up the price. And once the supply zone is broken, right, they would hope to possibly stop out the bears, because the bear is shorted at the top, right? And that's where the average is. And no, to all of us, right? No, everyone wants to win, and nobody wants to lose money. So once we break their average, what do they have? They stop out, right? And the bulls will hope, to squeeze the bears out, right? So that's all four existing, right? Exactly, squeeze, right? So that's all four existing, um, you know, constituent of a supply zone. So once we reject it off the supply zone, what do we have? The shorts coming in, right? And therefore, the shorts has initiated a position. And now, how do they know if they want to get more, right? What do we want to get more? And how would they want to get? How could they get more? By shorting more, right? It sounds kind of obvious, right? However, if they short more, that would have meant they have to bring down their average. So the lower the average is, the better it is to squeeze themselves out. And if they put more money into a short position, then at the end of the day, they'll have no capital. They have nothing, right, to do anything else. Because if you put $1 billion into the short here, and that's all you have, this is nothing else you can do but hope that the stock goes down, and you can't re-enter. Because guess what? You put all your money on the short here, and there's no continuation. And you might trigger all sorts of demand zones. And when the market maker sees that, oh, some idiot slapped $1 billion on a short, hey, and he's not one of us, hey, let's try to stop him out. And there's no way, for you guys, right, to exit, because what, you have nothing to back you up, and there's no continuation because you have no capital, and you can't loan either. because you're deep in that short. So because we all wanted to maximize profit, the bears and the bulls alike. So the bears will obviously try to short the top. Okay, short the top. And then they'll wait to see, excuse me, the reaction of the bulls. Right? If there's enough support, we can short it down. But because eventually the bulls does not want to lose either. If you get to their average, guess what? They'll stop out. At least that's for all of the day traders, right? Y'all, when you enter a trade, right, you set stop losses, and once it's green, once it hits your level, what do? Set it to break even, right? Every time in my alerts, right? Once we hit our first target, guess what? We set our stop loss to break even, so we ensure that we would never lose. And if we do get back to that break even, we're out. And that's what the bears want. The bears want to test if they could distribute the shares to the bulls, and eventually the bulls get tired and we can stop them out, and with the extra capital that they have. So to start a distribution, the shorts must initiate a strength, an average, right? So they have to create a supply zone or short from an existing supply zone. And that short, when we stop, that is the beginning of a distribution. Any questions? Anything that you guys want to add? Anything you guys think that you may know of? Okay. So the first step, all right, let me repeat myself. The first step of a distribution is the shorts establishing the position, initial position, so they can see whether or not there is support down below, right? So these guys who captured the tippity top are what? They are the market makers, right? I mean, nobody knows if they can get the top or the bottom. Nobody can capture the perfect top and the perfect bottom. But what they could do is, the big players, they could actually short to create a top, or buy to create a bottom, right? So these guys initiated, the big players, they initiated a short position, right? They have the capital, right? And what we do, which is trying to catch the movement. But that's a story for trading days. Anyway, so now we have a short here. Now, what's the next step? You could have a short, and you could have a big short, that crashes the market, but eventually we're gonna have to stop. Why? We're gonna find buyers on some sort of demand zone, right? Because not everyone is short. Even though we had that $8.1 billion in put options last week, it does not mean everyone's short. And in fact, right, institutions are still adding onto their long position, thinking, and all your mutual funds, all your 401ks, you know, a lot of people still think, hey, SPY's at 380 again. Let's buy it, you know? Yeah, exactly. Pull and call ratio is crazy. And what does the market maker think? Here's a little trick. What does the market maker think? All right, let's wait it. Let's wait for it, Big Dave. Yeah, it's pretty simple, right? If everyone's short, let's stop the shorts out. Okay? So everyone wants to be shorting at the top, but if there are too many shorts, there is no top. So we will have to kind of, you know, squeeze out all the bears and short the top, because eventually everyone's goal, right, the market maker's goal is to maximize profit, right? And to maximize profit, you need as many as oppositing orders as possible, which means that you have to short the tippity top of the market. Right? You have to find a point where everyone's bull, and then if you short, you stop not only the bulls out, right? You stop everyone out in that process, and you are able to capture the top as well as capturing the attention of all the other bears. Right? You want, because that's our goal, right? We want to capture the perfect top and perfect bottom, and that is the point of that, is to maximize profits. And so here, right here, we have bulls. So what does the short want to do in a distribution? What does the bears want to do with the bulls? Right here, right, at 380, 3.8, well, we found ourselves some sort of support, low buy on the volume side. What does the short want to do here? Yeah, exactly. Stop out the bulls, and they would, right? And if the bears know that, when we stop out the bulls, what do you get? More bears, because if one can see it, many others can see it too. So they'll try to pull the sell trigger so they can somehow capitulate from, you know, the stop loss rate, right? Click the button. Okay, right? So the second step, right? Second step, that we need to find the initial bullish defenses, right? And to see if we can get them out, right? Because on the way down, you only get stronger. If you see, you know, I know some of you use Webull, some of you use TOS, Robinhood. I think would be, that's one of the best examples, right? You could see what on the level two, a sell wall and a buy wall, and it only gets bigger on the way down, right? But during that sell wall and buy wall, during the process of breaking it, if one is exceptionally more weaker than the others, that means there's a lack of interest. and therefore, if we can break that sell wall easily or buy wall, we could break it again next time, and that zone is no longer to be considered. So if we could break the first demand zone that bulls have created here, right? That means this is not actually a support. This one, right? That means this is not actually support, and we can keep trying to short it to find the bull's actual defenses, right? Where the actual demand zone is at. Make sense? It's like saying, if we can, if what's a good example? Let's say a meme stock, right? Let's say Bed Bath and Beyond. It's it's all up to your mindset. Because let's say if we can get a short squeeze again here at one time, and then afterwards you could get a short squeeze again. Because why? You already have the existing bulls or bears, right? And once we have, you know, and right here, we're on a scale, right? We're on basically, let's put it, um, a um, a level, right? What's a better way to say it? Let's see. Yeah, pretty much a level, right? And you have to have, one side being bigger to the other to tip the scale. And if they know they could do it once, they could do it again, right? Because both sides are adding forces. They're adding, how to put it? Excuse me. They're adding weights, right, on top of the scale. And if one side's a little bit more, they could trigger an imbalance and create, either a downward momentum or an upward momentum. And since we already know there's not enough weight on the table for the bulls, there's not enough interest for the bulls to buy back up, right? You see the you see the now that low volume here, right? For that EMA said, now that comes into play because low volume means lack of interest, and either side must create interest, whether by themselves or by attracting others. So once we get some extra, you know, bearish volume here, right, and we could push even further down. Right? Does that make sense? But however, right, it can't be all short biased, because if you only have a short momentum, what can you also have? A low momentum, right? If you have a major zone of stop loss interest for the bulls, that indicates also a similar movement for a short squeeze interest as well. That's why I said Bed Bath and Beyond. If you could do it once, you could do it again, right? It's only determined by the size and the strength of the initial short. So now let's get into step 2, right? Step 2, confirmation. So we have to make sure that there is a support on the bottom, and there is, a significant short position on the top side. So 1 short, 2 find the support, and then what do we do? Anyone has any ideas? Because we have now found ourselves an actual support, so an actual bottom. So what do you think people was going to do? What do I think that people are going to do? So let's draw a secondary demand zone here, right? What does the people want on the bottom? They want to capture the bottom, right? They want to buy. Because what? If that's all the bears can do, then how about let's get in, buy the bottom, and stop the bears out, right? If the bears could see it a distribution as opportunity, the bulls can also see it that way, right? And here, it is highly determined on whether or not that bear is in control or that bull is in control. And right now, we have a situation where the bear is in control because they have initiated a distribution in this zone. So now, right? Yes, you're right. Yes, you're right. We have to draw. The bears have to have as many bulls as possible before they stop them out and capitulate the stop loss rate, right? So they have to join as many bulls as they need to make it seems like, oh, it's the bottom, let's buy, right? So they can maximize the profit. Okay, is it clear? Yes, that is true. That is also a way to create an artificial uptrend, right? To cover. So they have already had an initial position here. Okay. Yes, this is recorded. Okay. All right. Anyway. Okay. Right, let's go back to it. So we have what? A trap, as we say, a bull trap. We need to find as many bulls as possible. And how do we do that? To create an artificial uptrend. All right. Now we have an artificial uptrend. Okay, so this is carefully grafted, right? We're slowly making the bulls think that, maybe this is a reversal. Let's buy the reversal. Let's do an anticipation play. But what many don't know is a setup is a setup, and anticipation will remain in anticipation until it worked, right? You're basically taking chances on a breakout here. But that's what a lot of people do, right? They think there's going to be a breakout, so they add it in to actually make the breakout happen. But if the bears are in control, they can never let this happen. Because why? Why do we have a lower high here? Think about it. I'll give you guys a couple seconds. This is the previous zone, and that will extend it to the end. Exactly. And what does that supply zone consist of? The average of the bears, right? And so basically, right? We're short at the beginning because we are at that moment we're the bears, right? Put yourself in the shoes, right? And I can't be shorting all of it because what? There's no way. It's either make or break. If I get stopped out, I'm dead, right? So you have to have remaining capital to be able to capture the second wave of shorting. And here you have a bounce back into the demand zone, into the supply zone. Excuse me. What you want to do? Capture that top and short again. Make sense? Right. Add on to your position because you want to short the top and not the bottom. Think about it, right? If you short it here, right, and you short again at the bottom, trying to anticipate, the breakdown, then you drag your entire average from here to here. But if you don't, right, if you short it right here, right, if you short it on top of this artificial uptrend, your average is still right here. Okay, so that makes sense. That's why we have this cover near the end of the day, because we broke into the average zone, right? Because you don't want to be the only one that's shorting. You have to attract the bears to do it for you. You're the one at the top, right? You don't want to lower your average as much as possible, right? So you want to keep your average. You don't want to average up, but you can, right? But you don't want to average up too much that any fluctuations in the price will cause you to lose money. You want the market, you want the retail traders, you want the whales to do it for you. Right? When you see a demand zone forming, gotta take profits, gotta cover, right? And if we get back to supply zone, we can short again. Right? Make sense? Any questions? So now we have what? Step 4, right? Find the actual defenses, artificial uptrend, and breakout. So what this breakout is, like I said earlier, is to make believe, right? To make it appears like we're gonna break out and come do an actual reversal into higher highs, higher lows, and higher highs. Okay, so right now we're attracting the bulls here to anticipate that breakout. And once they enter, right? Once we enter, we smack onto the price, and that is to stop out whoever just entered. And then we will create a downward momentum, right? Stop loss rate. Everybody starts selling like, oh, we cannot break this high. Let's get out before you lose more. Right? So step 5, right? Create breakout attempts. Okay, sorry about that. So we will create a breakout attempt in this zone, yeah, right here, but not above the average of three right here is 384.77. So this 5-minute candle, right, where we have our initial bullish defenses from step 2, and then after the breakout attempt, right, it should commit a lower high, so that is to prevent further bullish strength. All right. And all of this here, right? All of this here is a test of mindset. Why is that? Because why don't we allow? Okay, here's a question. Why don't we allow this to happen? You know, a higher high. Why don't the bears allow, you know, a higher high to happen, even though the average is all the way up here? Hmm. Exactly. They do not want the bulls to be drawn in because if we actually created a higher high, what does that mean? The bears are losing control, right? So the shorts here aren't enough to hold, you know, this bearish resistance, and therefore, if if the bull sees it, you know, it's actually now turns into an opportunity, right, for the bulls, because they know there aren't enough orders, there aren't enough shorts up here to support the short. There aren't enough orders, so therefore, if they break out, right, if they add a little bit more onto this bullish attempt, breakout attempt, they could actually squeeze out the bears, right? Because there aren't any orders. But if the bears are in control, they were throwing as many as orders as there are into the mix. Kind of obvious, right? Okay. So step 6. After we reject the lower high, right? The bulls lose confidence. And because we have tested this demand zone so many times, right? 383.41, 383.42. Okay, so this is actually a lower high, lower low. Okay, because we tested this demand zone so many times and we broke through it so many times, that means there's a lack of interest. That means that the bears, could easily short it down again. And you can also look at it like this. Easily. Okay. Right, now we have a breakdown. So this is where, you know, your drawings comes into play. Right? Breakdown. Okay. Well, what's going to happen in the breakdown? Well, now we go back. What? We'll go back to 1, right? And 2. So after the initial breakdown, after all of this is happening, right? Because now this is not just the guy from the top, right? Look at the volume here. You have successfully attracted other shorts. Okay? and that's all they need, you know, to bring the price down even more, right? The shorts have to work together because what? Why does the short have to work together? But when it's long, you can't you want as many as shorts as possible, and you don't want any other ones to long before you. Why is that? Why does the shorts have to work together? This is an off topic trick question. So I'll give you guys a couple minutes to figure this out, so you can understand why. And this will be important later on. So let me repeat the question. Okay. Why do the shorts band together, but the bulls always want lower, and they always want themselves to be the first to catch the bottom? And why is distribution so much more important? Mm-hmm. Go on. Right, you all can add on to the question. Maybe to create a stronger push down and walk over the bulls. Of course, that when the but that the question is, why do the shorts band together? We're going back to mindset of why we take profits and the shorts, blah blah blah. Okay. Well, because if you think about it, right, who are the loans here? Who exactly are the loans in this situation? Yeah, sure. We have a previous zone here as from 380 to 383. Okay. But who are the loans and who are the shorts? You're like, oh, maybe the bottom buyers. Of course. Everyone wants to buy the bottom. But who are the bulls? Anyone? Anyone? Y'all can answer. Well, if they're prior shorts, how can they be bulls since they're already in the position? Right? They have not been stopped out yet, so they could continue. Yeah, of course they could be. Right? There are prior shorts, right? Shorts who turn into longs can be a bull. Who else are the bulls? You, your accounts, your long accounts, right? Your Apple, whatever you bought, your IRA, your 401k, mutual funds, exchange traded funds, your company, your friends, and their company, um, the banks who have investments, huge investments, right? Polish, right? And the rich who have majority of their wealth in stocks, so they don't have to pay the taxes. and the mainstream media. Because what? Because when the stock goes down, economy looks bad. Okay, so mainstream media, while protecting their own investment, will always make it look like that things are always as good as it is. Right? So everyone is a bull, but you only have one short. Right? You only have one short, and you stand against everything. When the stock market goes down, they always try to find a scapegoat: the shorts, the speculators. All right. So you're one short, and you have to band together, to crack down the bulls. Is that pretty clear? Is that pretty understandable? And now, right? And now we have that's okay. All right, let's move on. Right, we'll talk about this. We'll bring this right back up right in a second. All right, so we have a repeat of the similar situation: cover, uptrend, rejection, more down, right? Because we've already tested this supply zone, this demand zone, right, so many times, and we touched the bottom of the day, right? This candle right here, actually, this entire candle here should be a demand zone, right? Because this is where we start attracting the relative volume, right? Where there is significant volume, that means there's significant interest, and that gives you your supply or demand zone, because all the possible orders and existing orders there is. And okay, right, now let's talk about accumulation. Now, this is where we have the difference. Okay, this is where we have the difference. Actually, before that, let me ask everyone a question. So, are we all getting how distribution works, like basic distribution? Do you guys need more examples before I continue? All good. All right. Everyone's good. All right. So we'll be able to. So if I ask you again, right? If I will give more examples later on. Then when we analyze, the watch list for next week, right? But after this short introduction to distribution, I would believe and I would trust y'all can identify a pattern leading to distribution and make positive confirmation of it, and identify the strength and the average of that short. Yes? And yes, and once you identify the distribution, you'll be able to find the bullish support, right? Draw a demand zone, right? And then find an optimal re-entry. So like a lower high, like we just talked about here, right? Find out the reason why we have the short and able to capture the short. And once you capture it, enact your cautionary exercises, your stop losses, your profit taking skills, right? And then follow up, right? Which here has turned into accumulation. Okay, I believe you all be able to, able to identify distribution and execute a successful trade. Yes or no? Pretty simple. right? If you put into monkey terms, big short, up, reject, short more. Which time frame am I using for confirmation? Okay, yeah, I could. What I would do is usually 2 minute and 5 minutes. Sometimes on the 15. All right, usually short time frames. Okay, so that way you can identify the levels better and the strength, basic, because there is always small details in smaller time frames where you have more where you have a clear short or you have a clear uptrend and difference in volume, right? A spike. Pretty much. Anything else you guys wanted to add it on, or no? Or you have questions on? Good so far. What about Dre, Eminem? We got all the rappers here. Joe, Mr. Ponders, Nichols, Cons, Empis. Any questions on basic distribution? Right, there will be complex ones, and that I'll cover in the next period of instruction. Okay, that's fine. Okay, now let's go to accumulation. Okay, accumulation. You would think that it's the opposite of distribution, but it's just like I said earlier, right? You have a lot of bulls and only one short. So guess what? How do you maximize profit if everyone's already a bull? How do you do that? Yeah, you could squeeze, but if you're already squeezing, then you're already heading up, and you don't want to buy at the top. Well, yeah, you could hedge against your positions, but hedging doesn't do much. Right? You eventually you want to long. Eventually you would hold on to your position, to be able to achieve higher highs. So you would hedge, you would hedge with puts, obviously, to reduce risk and also profit on the downside as well, right? But where would you establish your average if you want to be catching the bottom, so to say? Where would it be? Where would it be? Stop losses that demand. Okay. So, obviously, what did we say earlier? Right? If you want to maximize profits, you have to have as many oppositing orders as possible. So in distribution, you have bears, trapping as many bulls as possible. Okay, but here, right? So let's so in a similar, in a similar, wait, let's put it a similar terminology. Right? You would say, "Oh, I want to get as many short as possible. I want to make sure everyone's short. That so I'm the only one winning." But as we already said, everyone, not everyone can be short. Okay, they could speculate, right, and they will find a better point. And for you, you have the same goal. You had to find a better point of entry. Right? So you have to make sure everyone's bearish, right? And that everyone nobody wants it. That's the low, right? So here, what do you need to do? Like Amanda said, you need to trigger as many stop losses as you can to start a position, because eventually you want to be capturing the bottom. And if there's still buyers, you can't capture the bottom. So you need to short it as low as it can and to make it appear that, oh, maybe you're really breaking down. Maybe you have to make sure that all the bulls exit. Okay. You have to make sure that you are the only one. Right under the demand zone, yes, that's possible. So if we break a demand zone, what does that mean? First of all, understand the mindset of a bull, right? If you most likely what's going to happen is 6 scenarios, right? Okay, like Big Dave said, exit liquidity. Okay, breakdown, right? That's a possible scenario at the demand zone. So let me explain the 6, right? So you said exit liquidity, stop loss rates, right below the demand zone, because we broke it, right? We broke that would be it would seem like we broke the bull's confidence, and that's oftentimes true. Okay, so when you have bulls who are stopping out, right, who does not wish to lose more, and they could also turn themselves into bears to anticipate more breakdown because they already shorted. I mean, they already got out the long position. And second, you have bulls who are waiting there but cancel their orders because they saw, oh, maybe the shorts are taking over. How about let's not buy here? Let's wait for a new better average. Right? And then the bulls who want to trap the bear set. Let's say if the bulls really want to hold it, right? But they also need as many opposing orders as possible. So let's make it a fake out, right? They want to trap the bears. So you have new bulls and existing bulls right then. And the bulls could always average down, right, to extend the demand zone, because the demand zone's, even though the demand zone's there, right, an order can be moved. Let's say I bought an option at $1 and I have a stop loss at 90 cents. But what if I saw an opportunity? I could move my stop loss to 80 cents, and therefore I wouldn't be stopped out. And I could always add more as long as it is within, my stop loss range. Right? And then you have what? When you broke a demand zone, you already have existing bears trying to short it. You also have new bears who are trying to short it down even more to anticipate the breakdown. But what do you always have? Because it is a demand zone, right? What do you always have? A buyer and a cover. All right. So that gives at least some form of entry for the bulls. But once they're stopped out, what do? They exit or they turn into bears. And the bulls who are waiting to enter, now they want a lower entry. So now what is that now? Okay. That is a zone removal or zone change. Okay, that can only be noticed when we have this form of fake out, or in level 1 time and sales. All right. So to make it simpler, right? In accumulation, you don't want the bulls to come with you. Unless you're playing a squeeze play, right? Unless you're playing a short cover, you're anticipating that, and you want to rally as many bulls on your side. But right now, you want to make the most profit, so therefore, you would try to get as low as possible, but not so low that the bulls lose their confidence. So fake out, like what happened right here. So initially, right, if you see the low volume here, we do have some form of support on this level, right? And we even had a low squeeze, right? But they want to make it look like that the bears are in control, and they were. They were. Any questions? So again, let's look at the mindset here, right? The bulls always want to buy lower, and the shorts also want to sell higher, right? And nobody wants to lose money. So what do we have here on the lower low? If you were a bull here at the demand zone, what would you think? And we just broke the demand, by the way. So what would you think? Any ideas? You're the bull. You wanted to loan on this demand zone that created, earlier in the day. Now we just broke the demand zone. What do you think? Anyone? Okay. I would stop loss. I would stop out before it goes. Okay. Yeah, that's one of the 6 scenarios, right? What else? Wait for confirmation if it's not a fake out. Okay, so you wait to see where you can buy in. Okay. More bearish biases, you might turn to a short. So what does that tell the real bulls? What does that tell the real bulls? Oh, everyone is turning bearish. Everyone's waiting. How about this? Let's capture the bottom here. And if you guys want to buy, oh, guess what? You're late. You missed the bottom. Okay. Is that clear? That's how accumulation starts. Right? You fake out all the bears, all the bulls, and the bears, so that you have as many oppositing orders as possible. And therefore, once you start long, Right? Once we get that momentum going, you would not be the one who's pushing the stock up. It will be everyone else. Is it clear? Right? They will buy it at a higher average while you capture the bottom because everybody else think that we're going down. Pretty simple, right? Okay, now let's look at the formations, right? Let's look at the formations here. So, we triggered the fake gap, right? Now, it is time to accumulate shares to start long. Okay, but again, right? You have a lot of loans waiting to buy in to capture the move, right? So what you want to do is to make it seem like that the bears are still in control, and you're going to create the same thing. You're going to do an artificial uptrend, and you're going to break down, as we have seen it here. Right? Let's draw that. Let's draw this trend line. Any questions? I'll give you guys a couple minutes. So what happens after the artificial uptrend? We go look back into the distribution, right? What happens after artificial uptrend? What do you do? Breakdown, obviously, right? But at this time, if the bulls are in control, they should not let the breakdown to exceed that of the previous demand zone, right? Extension, we talked about removal of the zone and extension of the zone, right? But if they move the average from here to here, which stop out all the bulls in the process, and this is where they established a new average, they wouldn't want to let it go back down to the new average. Okay, even though they want to buy the bottom, and they would buy the bottom, they want it back at this average. Right? And they would ensure themselves to have more capital to buy it right at the lows, right at the average. But they want to make it seem like we're rejecting. See the failure. You see the short volume on here, right? It's not enough. Not enough. And eventually, you have an actual breakout attempt. You see here, back at the bearish average, right? So here, what do you have? Why is this such a, with such a big candle? Why do we have all of a sudden such all the influx of volume? So what happened here? We talked about this earlier. Anything? Mm-hmm. So what did we say earlier, right? If you have a major zone of stop loss interest, then we will have similar movements which may occur. That is, in fact, what a squeeze also happen to be a squeeze interest, right? And then we know that thank you, and we know that we have a previous demand zone here. So once those bulls from the demand zone who were previously removed, you know, this entire chain of orders down here, and they saw the opportunity. Maybe this is the last point before they re-enter, right? Because if we reclaim a zone, if we reclaim an area, what does that mean? You have bullish interest, and what does bullish interest attract? More bullish interest. Okay, so and that's what most algorithm is based on, right? You hit a certain level, you buy. You drop to a certain level, you sell. And what are those algorithms created by? People, right? Algorithm reflects people. They reflect emotions, sentiment of, you know, the big market makers, right? The big players. And from that, right, just from the break of this level here, we got the interest because we reclaimed the interest, right? We held on to the breakdown, and therefore you attract an interest. But this time, right, you are not the interest. You don't have to long on this candle anymore. All you have to do is low push, right? But all the other ones, right, are playing for you. It don't really matter if that day is squat witching or if some important events going on, right? Because it really isn't. Option expiry, it's just option expiry, right? Contracts, boohoo. You could always stand. You could always roll your options into the next. But here, right, as we said, you already maximize profit by claiming the bottom. And now all the other bulls see the opportunity, see we reclaiming the zone here. They start long and help to push it for you. And we're going back to the previous bull's average, right? To bear's average, excuse me. And they failed to push down. And then you have this whole squeeze place coming up. I think this entire chain is a squeeze. And by that point, if you want to enter, you're what? You're doing FOMO. All right. And that's all they need. They need people like you. They need people who want to FOMO to push it even higher. Actually, starting from here, right? Starting from here all the way to the top, it's all pretty much in, the plans of an accumulation, because what? You never saw it happening. Any questions? Any questions here? Because if you think about it, right, no one can really time the bottom or the top, but orders can. Okay, orders can time the top and the bottom of the market. So therefore, you have shorts on the top and longs on the bottom, and the people who cannot tell, if the people who can't identify the market mentality, right, the fundamental target of the market makers, they will never be able to capture the movement, and there will be FOMO, conducting FOMO, and all these stop losses right here. And you would think it's chop, but it's just algorithms and human emotions playing along each other, right? And that is basically the technical fundamental of the day trader mindset. But here, right, I have to clarify, right, what is fundamentals to y'all, right? Because everyone has a different definition of it. What do you guys think that is the fundamental? Without looking at the worksheet. The financial house of business, I'm sure. Okay. So, balance sheet. Okay, what else? That's, if you think that's a fundamental, you can just type it out or, speak out in chat. Company beliefs. Okay, so how the company makes money. Profits, earnings. Okay, but, so I guess that's all the answers, right? But, put into perspective. What are these? What are these things? What does a balance sheet tell you? What does a financial health tell you? What does a debt ratio tells you? Functionality. What does the profit and earnings tells you? Numbers. And what are numbers? Technicals. Okay, just because XYZ company made $1 billion this quarter, it doesn't tell anybody anything. It does not reflect the decision making process. Does not reflect, their forward sentiment. Does not reflect their the company outlook. Because what are the ratings done by? The people, whether it's on their own or by a foreign credit issuer, right? And the people decide that the fair value and the intrinsic value of the stock, XYZ company, and the stock market. Right? And only the people can determine whether or not they want to buy, or whether or not they want to reiterate that their positions, if they're short or long or they're speculators or anything. Okay, the people who make the decisions of the company, right? The people who are improvising plans to combat inflation, whatnot. And the people who make the company and the people who buys the company will determine how much the company is worth. And in our perspective, is what we do, right? What the traders and what the investors do with the stock, right? And how it would reflect on the chart, right? This is why I always stress, right? It's important, the mindset of the traders, right? You have to understand why we stop ourselves out and how these stop losses affect, right, the stock market. That's why we have distribution and accumulation, right? Because essentially, right, what we're trying to do is maximize our profit and minimize our losses. And that's everyone's goal. And if everyone believes in the same thing, and if everyone uses the same technicals, you're gonna have expected results coming from long and short. You're always gonna have distribution and accumulation, right? Because we're all playing the game. We're all playing the game in the market, trying to make money, right? And the mindset of the bulls here, right? Although it may be different, right? Although the shorts needs a little bit more to push downwards, and all the bulls need to stop out everyone else, right? Make themselves the only winner in this situation, right? And what they want to do in different market conditions, right? Any questions on the basic, the mindset? Anything I didn't cover? Any scenarios that you might think that could bring an interest here? Let's say failure, right? Failure of a distribution, like we talked about earlier, right? Failure, a losing of control. And at that point, the bears themselves will stop even before the bulls come in. Okay, because they have already lacked strength, and therefore once things go wrong, the first thing they would do is get out. So usually what you see with short covers, it already began with cover, and near the end of it, it's the FOMO buyers. Okay. Could be pure cover, but once we get some sort of form of sellers in the distance, right? Why do we have sellers? Again, think about the mindset here. The sellers are only here to take profit on the buyers. The sellers are only here so because there are buyers on the bid, holding on to the price. So therefore they could take profit or initiate short. Right. Technicals are created on fundamentals. Okay, and my definition of fundamental is that because fundamental is based on people and the intrinsic value, the book value of the company, right? Not just that, and pretty much what the intrinsic value, what does people believe in the stock? What is fair value? Can anybody tell me? Yeah, the price agreed by market participant, but that's what the market is trading. Balance, maybe. Yeah, a balance of bulls and bears. That's what they think the fair value is. That's what the market price is, right? If SPY stays at 385.56, that is agreed balance of the market of the bulls and bears. They think based on current market conditions, based on the book value of all 500 companies and the future investment of those 500 companies, that it is possible, right, for me to say that this is the right value of the a SPY in from here now and on, and pretty much within the next couple of years, we're gonna stay on track of the same movement, right? Because investment grows, unless it's a recession, where investments need to be turned into other form of value, right? Fair value, what they think the companies are worth, and what they think that in the future what the company is gonna worth, how much they think the investment is going to return. That's why we have the stock. Right? That's why the stock itself has the price. That's why Tesla has such a high P/E ratio. People are like, why is it overpriced, right? But you got to see it this way: you're investing on the future of the company, not the current status of the company. You're investing on the idea, on the fundamental, that the company itself and the idea will be adopted by the people. That's why you have Bitcoin too, which is at $19,465. Okay. Yeah, the people think that because the blockchain technology is important, and it is, and it should be implemented, right? And it's also a form of untrackable, safe, current cryptocurrency. Okay, but still, right? All these policies made by people, all the things, all the decisions that the people see from now to the future of that investment. And it's for them to determine, hey, I want to short this because I think we don't have, in the near term, we don't have a future. Or I want to loan this because I think in the future, right, SPY is going to be bullish. That's why I loan. Or you can, in a different time frame, right, that's on the daily or the weekly. But right now, right, we're day traders, right? Or often we swing and we think, hey, due to this, due to there's an order being on the other side, due to the fact that somebody's shorting this, and whether or not we make because the actions comes with reactions, whether or not we make a long or short decision, and how we can take profit of that. That's what I think is the core fundamentals of your technical side. And there's also this value fundamentals, but we'll talk about that later on. Okay, technicals are created on fundamentals. They are created on the people, on the pattern. Why do you think there's VWAP, right? Or EMAs? Because for over time, people's trading pattern, people's levels, right? Important volume control, right? Important zone areas of interest makes the stock makes a distinguishable pattern, right? Makes also a trend line, right? If you think about it, right? Well, that's what technical is, right? An exponential, a moving trend line. And volume basically gives you the strength, average, and the direction. Right? That's basically the trading system I've been using. Yeah. Just volume and candles, pretty much all you need. And if you really think about it, right? What is a candle? The basic is the basic, right? The most fundamental thing. What is a candle? All the emotion of trade. Sure, you could put it that way, but it's um the stock, the value, the fair value, or the change of that stock, right? The price of that stock during that time frame that you're looking at, and we're high and we're low, we're whatever, right? That's basically what it is, right? But you said it. You said it. Right? It's the emotions of traders that gives a value of a stock, right? So again, right, I'm going to repeat this. What fundamentals of a technical analysis is what the traders do and how it reflects on a chart. Simple. Any questions? Questions, comments, concerns? Really appreciate the participation, Big Dave. All right. So I'm gonna leave this question here, right? For the value fundamentals that I'm going to talk about are in the next lesson. So as we know, right, Warren Buffett, he used to be a day trader. Now, obviously he's really good at it, and now he's not an investor, right? But even as as someone as smart as Warren Buffett, or as someone as good investor as him, or or let's say Larry Fink, right? Why do they miss a lot of the opportunities here, and what these misses would do? Okay, what Cassie Woods. I don't think she's a good example, but still she's successful, right? So from these people, from these successful investors, right, they still make mistakes, and lots of them. Right? Let's say Kathy Woods, right? Peloton. Okay, it was a good concept, right? And it has a special niche, indoor exercise, iPad on a bike, on a stationary bike, excuse me. Okay, man, why did it fail? Or what did she not see? Or then, for example, right? Amazon from a online bookstore, online CD, turned into the current, the internet giant, the merchandising giant. But yet, Warren Buffett and many others failed to see the company, and they did not invest it. They did not believe that Amazon was ever going to make money. So why did that happen? How do these brilliant, investors fail to see the value of the company, even though the idea is great, or that they do, but the company still fail? Why did that happen? And how these mistakes would, show on a chart when we have the failure of distribution and the failure of accumulation. Think about it. Right. This is my question for you. Any questions, comments, and concerns for the class? Okay. So after all of this, right, I believe you all understand the technical fundamentals of a day trader mindset. I believe you can understand the what the mindset, how the bulls and bears react in during the distribution, and in the corresponding supply demand zone. Right? And I believe y'all understand the basics of value fundamentals, and this should conclude this period of instruction. Right? I thank you all for coming. Any questions, comments, and concerns before we go? You're very welcome. Now, we got an hour before Investor Gadget start his weekly stream. So, guys, please go check it out at twitch.tv at Trade the Chart, and feel free to drop a ticker in his channel. And thank you. Yeah, I'm feeling a little bit better. I still may or may not be live streaming for the next couple of days, but I'll let you guys know when I get back. And go check out Gadget Stream, and I hope you all have a great rest of your evening.